Hey everyone, JC here with WEDGE Concepts, and in this video I'm going to go over credit scores and how they're calculated. So let's get right to it. All right, so credit scores, right? So your credit score measures your credit worthiness and how you basically manage debt, right? So you can look at it like a GPA, if you will. So your GPA is going to give a number of the grades that you got from all the classes from an entire year, semester, quarter, whatever, whenever you graduate. That gives schools an idea of where you fall. So the same thing is with the credit score, right? So lenders, they kind of assign their interest rates based on what bracket your score falls into. So I don't know the exact brackets, but everybody's different model, but usually between 680 and 720 is pretty much average. 720 to 780 is ideal. 780 or above is another bracket, right? So ideally you want to be 740 or above to get kind of like the best rates. So I mean, it's gotten to the point now where, I mean, insurance firms, your landlords, employers, they all look at your credit score now because this kind of gives them an idea of how responsible you are. So if you're not taking care of your money, then, or you're not being responsible with your money, how are you going to be a responsible employee, or how are you going to be responsible enough to pay your rent on time or even take care of your apartment or whatever you're renting, right? Okay, so your FICO score, right? And it stands FICO, FICO, stands for the Fair Isaac Corporation, right? It's the most widely used credit score. It ranges between 300 and 850, and of course, the higher the number, the better it is, right? So again, anything over 740 is considered excellent, and you'll be able to get the best rates. You'll qualify for the best rates, and anything below, let's say like 650, then you can still qualify for certain things, but you can expect to pay the highest on rates, especially when it comes to loans and credit cards. So for example, if you were to have a score of let's say 660, and you get a 30-year mortgage, and let's say the mortgage is like 5% or 5.3, and you have a score of 680, then you know that's like 4.7%. So you're talking about from a 660 with a 5.3, 5.0, whatever interest rate, just those 20 points to a 680 can make the difference of roughly $900 an entire year. So it's very important to get as high as you can, right, to get into that next bracket. And there is another kind of scoring model. It's called the Vantage 3.0. A lot of times you'll find these on Credit Karma or on different websites where they offer free credit monitoring, and these are good too. But the thing is that a lot of these lenders actually look at your FICO score, and the models are a bit different. So the goal is that no matter which model you look at, you want to make sure that your score is increasing, right? Okay. So how is the FICO score calculated, right? So no one knows the exact formula, but we do know some percentages on, how it's weighted. So 35% is contributed to your payment history. Another 30% is the amount you owe. 15% is the length of history, and another 10% goes to inquiries, with the last 10% looks at the variety of accounts, right? So the most important is going to be your payment history, right? And that just means paying your bills on time. So lenders like to see that you pay your bills on time. The second most is going to be the amount you owe, which is your utilization rate, right? So for example, if you have a $5,000 credit limit and you owe $1,000, you divide that, so you're going to be using about 20% of the 5,000, which is $1,000. So your utilization will be 20%. Okay. The third most is going to be the length of history or your average age of accounts. A lot of companies, they do, and credit cards, they do look at the oldest age as well as, the newest and all these little factors. The last two though, inquiries and the variety of number of accounts. The inquiries are like the hard inquiries. More importantly, the soft we're not going to talk about, but the hard inquiries, those are the ones that whenever you apply for a loan, apply for credit, they pull your credit. So they're going to watch that number. Ideally, you want to have less than 5 hard inquiries within the last 2 years. After 2 years, the hard inquiries will drop off. And just the variety of accounts, lenders like to see that you have a variety of accounts, that you have student loans, you have car, auto loan, you have mortgage, you have a couple credit cards, you might have store cards. They like to see that you're able to manage multiple debt. Okay, so just to quickly recap, your credit scores definitely measure how well you manage debt. Okay, your credit scores, you want it to be over 740, and that will typically qualify you for the best interest rates. Your payment history is the most important and accounts for 35% of your score. Now, do me a favor, go ahead and click on subscribe below and leave me a comment. Let me know if you check your FICO score or if you prefer the Vantage score. Do you use your bank app, or how do you check your score? Also, check out my other videos and let's build together. Peace.